Hello everyone, this is Santosh Pasi and welcome to the video options strategy trading basics guide. So this is video in case if you're new to the options world, it will help you to get started with options trading. And if you have enrolled for my workshop, kindly go through this video because this will help us to move faster during our workshop. Before we start, here is my short introduction. So I'm into the trading world for more than 14 years. I have traded stocks, futures, commodities, global currency pairs and options. My focus is to trade options that do non-national strategy based trading. We have a software called Option Oracle. So this is India's most widely used option strategy analyzer tool. And then we have another software called OpStrater. The purpose of OpStrater is to analyze the volatility, and based on the volatility it's gonna give you some strategy name, recommended strategies that you can go and add in Option Oracle. Once you make the strategy in Option Oracle and you're comfortable, you can come back to the OpStrater and import it. It's gonna validate those strategies in terms of profitability, probabilities and breaks, and it's gonna give you the right position sizing. I worked mostly based in India, but that too in Mumbai. But I got opportunity to work other part of India like Chennai, Delhi, and Bangalore. Then I worked in USA, based out of East Coast like New Jersey, New York area. Then the West Coast, California region, and then most of time I was in Texas. I worked in UK based out of the city called Southampton for an asset management firm, and then I'm being other part of the world like Australia, Singapore and Sweden, especially on my business related activities. I got opportunity to being a speaker on various platforms, and we do a lot of blogging, and I've done a few live trading sessions. In case if you want to know more about me, there's an article on money control, so you can read that article and you get a lot of information about me. As a speaker, I'm being there at Kotak Securities Traders Carnival and Option Symposium. We have done a live trading sessions on expiry day at Kotak Securities and at Traders Carnival. And then we have done few webinars like one for WhatsApp and one for elearnmarkets.com. We do write articles, and you can read in money control under Guru Speak section. And then we do publish trade ideas that you can get in money control. So this is our guide, that is option strategy trading basics guide. So these are just if and buts. So we believe that every trade carries some amount of risk, and as such, there is no holy grail system. And this is not tips or advisory service. This is disclosure and copyright information. I hope you're going to respect that. So I'm going to move to the next tool, and that is OpStrater quickly. And what we're going to do here, we're going to start OpStrater. So that's over here, and this is very easy to use. So what we're going to do here, first one is says OpStrater using the Wix. Okay, so that means that's very easy here. So India Wix, so you need to click only update here, and once you click the update, you're going to check that these things are here. So it does show that this is last updated on so and so date. Wix actually is 15.86 and it increased. So let's see the behavior, what happened to that day. But that day underline went down, as you can see here. But what happened to the VIX? It actually increased by around some 2 percentage. Okay, as you can see here, 2.85 percentage. So this is a typical behavior of a Vega. So if my underline goes down for panic situation something, volatility actually increases. Okay, so typical generic behavior of that. Then we have seen that in our notepad example that 30 was the 52-week low, and 9 was 52-week high, and then we have seen there it was in the low zone, so showing the low zone. showing us that we should be a buyer here, so that's a debit strategy. And it's saying that if you're going for non-Russian, then the best recommended strategy is do some sort of a calendar spread. If you're bullish view, then recommended is go for a bull call spread, and if you have a bearish outlook on the underlying, then prefer go for a bear put spread. So this is a very easy tool, just try to practice that. Next comes HV versus IV. So let's click on the Nifty once again here. And so this is a different algorithm. So this was based on the VIX and this is based on the HV versus IV. First step, you have to click on Auto IV. So once you click that, it's going to download the current option chain data showing the IV here. Second step, you need to click on download. Again here showing us that volatility level is low. Preferred is going for some sort of buying strategy. For example, non-Dashing, a candle spread, a bullish strategy, a bull call spread, and bearish strategy, a bear put spread. It does shows a lot of other information like LTP price, lot size. It does shows you put call ratio that's showing 0.59, and that looks like a bearish. It shows a trend based on the SMA 20-day daily. I shows that bearish, and the ATI shows 109.60.69, and that means almost we can expect 0.9% move in a day. And then HV some values, and it's showing you IV some values over here. So you need to practice that. Once it's showing us that the best strategy is calendar spread, okay, then you may wish that, oh, I want to go with the calendar spread. So next step, go to the option oracle and make a calendar spread. So what I'm going to do, I'm going to delete everything here, and what I'm going to say a template, and I'm going to make a calendar spread. But I assume that I want to go for Feb and March series. So let's practice that way, and in that case I'm going to change everything from weekly to monthly. So let me write that, and let me write this. Okay, and then let's assume whatever shows here, I don't want to trade 50s. So what I'm going to make it, I'm going to make it 12,200 everything. Let's do that way. So I'm going to change all the strikes to 12,200, and let's make it again 12,200. So everything I've made 12,200. So this is and if you see the diagram, it does looks like a calendar spread. This is a calendar spread diagram. Okay, so once you make this strategy, you need to customize the way I have made customization here in this example. And then you have to see the diagram, and you have to see that, yeah, does diagram looks good or bad. It means in terms of height is good versus the width is good. Height means profitability, width means probability. So if you think it looks good and the within the very close to the standard deviation one, that may be, if you're considering those things, and then you comfortable, go and save this strategy. So I'm going to save this strategy, and as a test 01, I'm going to write here a new name. Let's assume I do write test 01, and yeah, it's saying override. No worries, let it override that way. So I've saved this strategy as test 01, and I think this would be good strategy because I'm gonna earn here around 277.50 points. That's maximum profit potential. Worst case losses is 107. Upper protection, it does shows me that 3.7% is upper protection, and lower side I do have protection of around 3%. It means underline should not go above 12,629, and my low protection underline should not go below 11,794. Currently the return is zero because we just initiated the strategy, but if market stays at the current level, in that case it may turn to 247 points. Total data is 0.01, in this case showing positive. It means if my underline goes 1 rupee up, I may get a 0.01. If your underline goes 1 rupee down, in that case I'm going to lose 0.01 as a delta. Vega if increases, that's good for me, I'm going to earn 10 points. And if my Vega reduces, then I'm going to reduce this profitability get reduced by 10 points. Theta today I'm going to earn or 1.96, and tomorrow I'm going to earn more than that. And some advanced Greek ratios are here. So once you make this strategy, you're going to save here and then come back to your tool, and you may go to a trade manager quickly, and you can say new, and you can add. So we selected a strategy called double calendar spread. The symbol was Nifty, and then you may wish that what is your support and resistance. Okay, So you can use something like put call ratio. It does show you support and resistance, but I need a support and resistance not for 24th Jan because this strategy is valid until 27th Feb. So it says this should be a valid range. So you may select 12,000 to 12,500, or you may wish you can go slightly lower than that. So based on that, or you can go and see the chart, and based on the chart you may identify support and resistance. So there are different ways are there. Maybe you can see this standard deviation based on the 11,600 to 12,700. So you may take those kind of range here. So let's assume that I'm considering a range based on what is shown here. So I'll consider 11,600 as my support, and 12,800 as my resistance. So standard one range that has been shown over here. So slightly lower strike, this one becomes my support, and assume this one becomes my resistance. Okay, and I don't know whether that range is good enough, but we will check. Okay, so I'm going to write here that 12,800 is my resistance, and I think 11,600 we choose, and that will be my support. Then you need to copy all this data, and these data are actually written over here. So you may wish and say copy from that. So you have to make sure that it is being shown here, then only it would be able to copy here. Next, you can click import from the option oracle, and you can go and click on this test01 and say import. All the data are imported here except for these two yellow data. So it says if your strategy goes to 12,810, then what will be your loss? So just say 12,810. Although we took 800 here, it added some buffer. So 10 points buffer it added here, and it reduced a 10 point buffer. That is a 10% of our ATR. So let's click on this graph, and we'll see how much I'm going to lose at 12,810. So let's go and move the mouse over here. So I can see I'm at 12,810 roughly over here. Let me increase the bigger picture, and that's 12,810. That's over here. In that case, I'm gonna this strategy gonna lose around as you can see from this diagram, we're gonna lose 50 points. Okay, so 50.36, that is on expiry 27th of February. Today if it hits, it's gonna lose 31. The bigger number I can see is 50.36. So I'm gonna write here 50 point minus 50.30. Instead of 36, I'm writing 40 points, and make sure these losses are lower than the number which is shown over here. And next comes 11,589. So I'm going to click on the graph, and I'm going to say unpin 11,589. So I can say 11,589 is somewhere over here. 89. Okay, sorry about that. Yeah, that's 89. 11,000. Let me see the number. That is 589. So that would be somewhere here, 589. Okay. In that case, I'll be lost on the, let me say auto scale. So showing the loss is 59.19 on expiry, and today is smaller loss. So bigger loss is 59.19. Instead of 59.90, I'm gonna write 59.20. So let me write here minus 59.20, and those both the losses are lower than this number. It means my RR ratio is good enough. Then let's assume that I'm happy to lose 10,000. That is my risk appetite in that profile. In that case, risk per trade 10,000. Then we're gonna say validate, and as you can see that it says the range is, this range is good enough for until the end of this series, 27th February. Assume that this is not 27th February, but this is for end of March. Then you may think that range still the range is good enough. Let's assume that if I go for April, then it may say the range is not good enough. So based on the time scale, the range may be good or maybe bad. Okay, in our case it is 27th of Feb. We're going to keep that. So range was good. RR ratio, that is reward to risk, it says is good enough because you are need to earn 27 versus going to lose worst case around 59.20. Greek, it says yeah, this delta vega theta looks very good, and if you're happy to lose 10,000, then your lot size should not be 2. In this case everything should be 2. So 2 longs, 2 shorts, again 2 shorts and 2 long. One is for shorts are for February series and longs are for March series. Then there is something called worst case analysis. So we will gonna cover this in detail in our workshop. Then there is something called adjustment plans. So initially you won't be comfortable to do that. So we will cover those in detail in our workshop. Then you may write your exit plan at what points. Assume instead of 270 points, if I'm happy to earn 200 points, I'm going to write here 200 points. And the worst case scenario, I should not lose more than 92, but ideally I should get exit here. And if you have some kind of learnings earn, you may add over here, and that's it. And let's save this strategy. So I'm going to write as test 0 1, and it may overwrite once again. That's okay. And that's what our strategy. So this is that's a strategy trade manager. Then there is something called option morphing. You may explore that, and uh, you just try to do if you can replicate this example at your end with the latest numbers. Okay, so that is all about the tools. So let's quickly go here and let's see whether we have covered that. So we have gone through the wix. Very easy, just click on the update button and everything works out of the box, and then it's gonna show you the current wix value change for the day, whether uh, what is 52-week high, 52-week low. Is going to show you the volatility levels and the debit or credit strategy, and it will show you some recommended strategy names. Then we have done this exercise. We have gone through the HV versus IV. You may select some symbols. Instead of Nifty, you may select Bank Nifty. You may select some stocks over here. So it is good for stocks as well as for indices, versus VIX is only good for the Nifty. Okay. Then the first step is you have to select here. Second step, you need to click Auto IV, and third step you have to click download, and then it's going to show you recommended strategy. Next step is you have to go to the option oracle and you need to add those strategies. And once you do add strategy, come back to the trade manager and you need to fill up all these four box. Make sure that start with the number 1 and go all the way to number 10. Don't make a shortcuts over here. And you should get a first two green. If you get the range and the reward to risk ratio green, in that case it looks a good trade. If you get this gray orange color or maybe a red color, that's okay, but first two should be green. Okay, then you need to analyze worst case scenarios. You have to write your adjustment plans. You need to write your exit plans over here that we will gonna cover during our workshop. And then these are typical module 2 questions. So how do we update position with the executed price? As I've shown you, you go on the price column and you need to double click here and you need to write those numbers, your numbers. Okay, like I've shown here. Next question, module 2 is how do we close positions? So on the open, you have to right click and say square of position, and here you need to write your closing price. So this is your shorting price, this will be long price. If it is long, then what is your short price? Counter positions you need to add. Next question is what is meaning of return if change if underline expires at the current spot price level? Okay, then what my current return would change into that. What is recommended, HV versus IV? Definitely HV versus IV, because that is good for the stocks as well indices. This is only good for the Nifty. How do we calculate a risk per strategy? That means some percentage of your capital, maybe 1%, 2%. What are you comfortable to lose? Then what precautions we have to take while change if you're changing the stop loss in the STM trade margin. If you're changing the stop loss, it means you need to recalculate all these two buttons here. Okay, and then while importing in the trade manager, the quantity size should be 1. So that's good for module 2. And we're gonna start a third module, and that is frequently asked questions. So let's start one by one. So before we go into the frequently asked question, we're going to start with something called common terminologies, and then we'll go through other questions asked. Okay, so let's start. First one, credit strategy. Credit strategy is the strategy where net you are seller. So you may be buying some cheaper things, but you're selling some expensive things, or you're just a seller. So those would be nothing but a credit strategies. Okay. Next comes a debit strategy. It means net you are a buyer. So what it means that you are buying something and you are selling cheaper one. So you're buying expensive thing and you're selling the cheaper thing. So let me show you here. We do have some write up in this book. Okay, so credit strategy means where you are getting some credit, you're getting some premiums, So those credit strategies, like examples like short triangle, short straddles, iron condos, those are nothing but those are my credit strategy. Debit strategy means net that you are a buyer, so you might be buying something, or you might be buying something expensive, selling something cheaper, like long call, long put, bull call spread, or bear put spread. Those are nothing but those are my debit strategies. Vertical spread means something up and something down. It means you bought some call, you shorted some call, or you bought some put, you shorted some put. So those would be nothing but will be known as vertical spread. For example, of a bullish vertical spread means bull call spread or bull put spread. Bearish vertical spread means bear call spread or bear put spread. It means here we bought some call and we sold some calls. Here we bought some put or sold some put. Horizontal spread means where we are mixing up the calendars of the time. So this is also known as time spread of the calendar spread. So examples like call calendar spread or put calendar spread, or as we have done in our example, double calendar spread. Diagonal means take any vertical spread and change the series. So for example, let's take this example, but here one call was for the this series, next call was for the next series, and the different strikes, then that would turn into a diagonal spread. So you need to do some research on that and get familiar with this ones. Okay, ratio spread means take same vertical spread but change the count. So we are going for one long call and two short calls, maybe 1:2 or maybe 1:3 or 3:5. Some ratios would be there, then that would be known as ratio spread. Then there are a lot of guys, they do trading based on the Greeks, for example, like delta neutral strategy. Delta neutral strategy means total delta in the option oracle. Like here, if you get 0.00 here, okay, so let me go and delete this last row, and let me make it open here. As you can see, delta is almost 0.01. In fact, they would love that it should show shown as 0.00. Then that will be known as delta neutral strategy. It means my underline goes 1 rupee up or 1 rupee down, still in the option payments you will have a zero impact. That is the meaning of delta neutral strategies. And then there are some other things like vertical credit strategies, so you can do a research on that. And then vertical debit spread, again you may do some kind of research, so you'll be prepared for the workshop.